Our next guest sees catalysts ahead that could drive outperformance from here. Let's bring in top Apple analyst Morgan Stanley's Erik Woodring. It's good to see you again. Welcome back.
Scott, good to see you as well.
Why has this stock been such a dud this quarter?
We have seen, for perhaps the first time in several years, a multi-quarter stretch of negative estimate revisions for Apple. Each earnings period we get to, the narrative is maybe the in-quarter numbers are okay, but the future outlook needs to come down and gets ratcheted down. Alongside of that, we've seen about 4 turns of multiple compression since August of last year. That is probably, as simply put, as simple as I can make it. Again, there's other factors that play into that, but negative estimate revisions, multiple compression, we have a stock trading at 170.
Why is it going to turn around?
So our thesis generally is twofold. One, if you look at the stock, we think there's relative asymmetry in the risk reward. A bear case of about $155, call it 9%, 10% downside from here. A price target of about $220, call it 30% upside. So 3-to-1 risk reward, but ultimately you need a catalyst to go from 170 to 220. We do think until you get past March quarter earnings and the June quarter guide, the stock, before then, the stock will maybe trade as it has been. But once you get that out of the way, kind of a clearing event, which we thought would be the March quarter, we were wrong, it wasn't. You get closer to the developer conference, and we think the developer conference will be fascinating in the sense that this will be probably one of the biggest software upgrades that Apple has gone through in years, in instilling some of this generative AI technology into iOS, then onto the iPhone 16. Giving users a reason to say, I need to upgrade my old devices, buy a new device, and maybe there's actually even some potential for AI-related services spend that we could get on the back of that.
At prior times, Erik, of let's call it stock chart discomfort, you've come on with me and said, look, I wouldn't add fresh money to it here. Yep. And that wasn't that long ago, right? And then the stock went back up, but here we are. We find ourselves questioning what we should do. What would your advice be in that regard today?
Yeah, so my advice is simple, is between now and let's call it the end of April, early May, the stock's going to trade likely sideways. There's still concerns about China. We obviously had the DOJ case filing last week, which to my surprise, caught the market by surprise. Once we get past March quarter earnings, to me, this is a catalyst-rich story. We get the negative news out of the way. You have 2 positive catalysts in the June 10th developer day, the mid-September iPhone launch. So to me, if you need to be tactical, there's a month where you're going to get a stock trading sideways. If you have longer duration, $170 with a 3-to-1 positively skewed risk reward is a good opportunity to add to the stock. Again, we've gone back over the last decade. This is the worst start to a calendar year that Apple has had. Again, with catalyst-rich kind of events coming up over the next 4 months, we think now would be the opportunity to take advantage of that, add to a stock that we believe is trading at a discount when you take into account what AI can do for the next iPhone cycle.